3 must-buy stocks for January 2026. Our criteria: sustainable competitive advantages, strong balance sheets, and identifiable catalysts specific to the 2026 timeframe. January 2026 is not just the start of a new year, it's a strategic reset. Let's dive in. Number 3. Broadcom. Broadcom is a powerhouse in the semiconductor space, and it's poised for explosive growth in 2026. The company designs and manufactures critical chips for networking, data centers, and custom AI accelerators, the kind that power the massive AI models from hyperscales like Google, Meta, and Amazon. In fiscal 2025, Broadcom's AI-related revenue surged over 70% year-over-year, and management has guided for even stronger acceleration into 2026, with AI chip sales potentially doubling. Bank of America recently highlighted Broadcom as one of its top semiconductor picks for the year, citing its dominant position in custom silicon and high gross margins that reflect strong competitive moats. Analysts project revenue growth of around 29% for fiscal 2026, driven by expanding partnerships in the AI ecosystem. Valuation-wise, Broadcom trades at a forward PE that's reasonable given its growth trajectory, especially compared to peers. With the global semiconductor market on track to hit $1 trillion in 2026, a 30% year-over-year jump according to BofA estimates, Broadcom's exposure to high-demand areas like Ethernet networking and application-specific integrated circuits makes it a standout. Risks include supply chain disruptions or a slowdown in AI capex, but Broadcom's diversified portfolio and strong balance sheet provide a solid buffer. If you're looking for exposure to the AI boom beyond just GPUs, Broadcom is a must-consider addition to your portfolio in January. At number 2, Amazon. While 2025 was a relatively quiet year for Amazon stock performance-wise, the fundamentals have never been stronger, and 2026 could be the year it rebounds sharply. AWS remains the undisputed leader in cloud computing, capturing a massive share of the infrastructure powering AI workloads. AWS revenue grew double digits in 2025, and analysts expect acceleration in 2026 as enterprises migrate more AI applications to the cloud. Beyond AWS, Amazon's e-commerce dominance continues, bolstered by a booming advertising business that's now one of the most profitable segments. Morningstar and other firms highlight Amazon as a wide-moat stock with undervalued potential heading into 2026, trading at attractive multiples relative to its projected earnings growth. Consensus estimates point to mid-teens revenue expansion, with operating margins improving thanks to efficiency gains and AI-driven optimizations across the business. Wall Street sees significant upside, with targets implying substantial gains from current levels. Amazon is also investing heavily in AI, from custom chips to generative tools, positioning it as both a beneficiary and enabler of the technology revolution. In a resilient U.S. economy with consumer spending holding steady, Amazon's diversified revenue streams make it incredibly durable. Potential headwinds like regulatory scrutiny exist, but the long-term tailwinds far outweigh them. This is a core holding for growth-oriented U.S. investors. Don't miss the opportunity to add shares in January. Third is Nvidia. Yes, the king of AI chips continues to reign supreme. Nvidia has been the standout performer of the AI era, and all signs point to sustained dominance through 2026 and beyond. Nvidia's data center GPUs, like the Blackwell and upcoming Rubin architectures, are the gold standard for training and running large-scale AI models. The company reported staggering growth in 2025, with data center revenue visibility extending hundreds of billions into 2026. Bank of America, Goldman Sachs, and numerous analysts rank Nvidia as their top semiconductor pick, forecasting continued market share gains and explosive earnings growth. Projections show Nvidia's revenue potentially rising over 60% in fiscal 2026, driven by insatiable demand from cloud giants and enterprises. The company's free cash flow is enormous, supporting massive R&D and shareholder returns. Even after its incredible run, forward valuations remain compelling when adjusted for growth. Analysts see upside of 40% or more based on recent targets. Broader AI adoption across industries, from healthcare to autonomous vehicles, will keep demand red-hot. Risks like export restrictions or competition are real, but Nvidia's technological lead and ecosystem lock-in provide a wide moat. As Morgan Stanley notes, We're entering a new bull market phase powered by AI productivity gains, and Nvidia sits at the epicenter. If there's one stock you add in January 2026 for long-term US market exposure, make it Nvidia. My 3 must-buy stocks for January 2026 are Broadcom for its AI networking prowess, Amazon for its cloud and e-commerce leadership, and Nvidia as the undisputed AI chip leader. These picks align with the strongest themes for 2026: AI infrastructure build-out, semiconductor expansion, and resilient tech growth. What do you think of these picks? Drop your top stocks for 2026 in the comments below. Hit that like button if you found this helpful, and subscribe for more US stock market insights. Thanks for watching. See you in the next video.